Because if we look at the statistics, in 2023, more than 70% of China's utilized foreign direct investment came from Hong Kong, reaching $137 billion in a single year. This has gained steam over the last 2 decades. Now, these billions aren't coming from Hong Kong itself. With a GDP of just $360 billion, it can't possibly send $137 billion a year worth of investments to China. Most of the money actually comes from financial institutions based in other countries, who use Hong Kong as a conduit for China. This has to do with Hong Kong's unique financial system. Although Singapore overtook it in 2022, Hong Kong used to be Asia's financial hub and the third biggest financial center in the world. The reason it was so popular is that the city has its own financial regulations and currency, which makes it more attractive for foreign investors. Both institutions and retail investors prefer not to put their money directly into China because of the risks that are associated with it. It's not really a free market economy, so there's always the chance that the CCP intervenes. Also, the Chinese government doesn't really welcome foreign investors on the mainland. In order to invest directly, you need licenses, such as the Qualified Foreign Institutional Investor. And even if you obtain such a license, after a long bureaucratic process, you are still subjected to strict CCP guidelines. Because this is such a hassle, much of the investment goes through the Hong Kong Stock Connect and Bond Connect markets. These are financial schemes for Hong Kong investors that make it easy to access the Shenzhen and Shanghai stock exchanges and China's debt markets. But what makes Hong Kong even more appealing as a financial gateway is the currency situation. In order to buy Chinese yuan-denominated assets with US dollars, going through Hong Kong is by far the easiest way. The Hong Kong dollar is pegged to the US dollar, which makes transactions very stable. Meanwhile, the Chinese yuan and the US dollar aren't fully convertible due to capital restrictions. However, it's possible to transfer your US dollars into Hong Kong dollars and then convert them into Chinese yuan in Hong Kong. The setup is all on purpose, of course. For the Chinese government, it's a way to get foreign cash without being directly exposed to international currency markets. This shields it from a lot of financial instability and potential crisis. And that role is only amplified by Hong Kong's place at the heart of the Greater Bay Area. The GBA, in short, only helps with its function as an international bank for China. The area houses around 86 million people, with a combined GDP of around 1.9 trillion US dollars. This includes the third and fifth biggest cities in China by GDP, namely Guangzhou and Shenzhen. There are a lot of booming enterprises nearby, and all of them need investment and loans to keep growing. This financial incentive was one of the main reasons why the CCP didn't completely take over the city in 1997.